Hello accounts people, time to have a look at a VAT control account. So the purpose of a VAT control account is that at a glance, or when it's completed, you can work out how much to pay the government or how much to reclaim off the government. Most VAT periods are for 3 months. Occasionally there are other systems where you just pay the same amount every month, or you work it out on the basis of sales, or for big retailers they pay on a monthly basis, but we're doing it for June, July and August. You could of course post the day books in on a monthly basis to get a running total as to what your likely bill is at the end of the quarter. Sometimes that's useful. Also you might wish to put in all 3 columns because actually the nets are part of the VAT form that you fill in. But we'll stick to the AAT standard layout, and we've already put in the opening balance. So the opening balance for this time period would have been on the 1st of June, and then we paid it in good time, or on the right time really, on the 7th. If we paid by direct debit it would be a couple of days later, and it wouldn't be an overpayment because we'd have to pay exactly the right amount. We are allowed to claim this back, so assuming the debt is 6 months overdue, so if it's a 7-day invoice, 6 months plus the 7 days or 28 days or however long we put on the actual invoice when we issued it, and we sure they've gone into liquidation, I should say irrecoverable really, but it doesn't fit in very easily and it's a mouthful. So we can claim that £40 back. At least it reduces the expense to us. And then we're also allowed to claim back office equipment. It's an asset. It doesn't belong in the day books. It might just be in the cash book. Or it might be in the journals. Either way, we're going to claim that £200 VAT back from the government. But likewise, on the 14th of August, when we dispose of office equipment, if we claim the VAT back when we bought it, we've got to assume the amount that we get includes VAT, whether it's cash sale, trading or whatever. We assume that amount of money includes the VAT. So £600 would have been £500 plus 20% plus 100. Nice easy sums. Then we get to the end of the time period, so we're now into the 31st of August. Our till or our cash sales, 9,600 including VAT, just divide it by 6 the easy way. £8,000 plus 20% is 9,600, the difference is the 1,600. Then we've got our day book totals. Our main one, sales day book, keyboard's playing up, but now I've got it incorrectly, and because it's a debit entry this reduces the sales day book. We want our sales day book but in the right place. And our sales return day book showed £50 VAT. Then we've got our purchase day book. Purchases are debits, and our purchase day book had 984. And our purchase return day book, which I think has just got one little item in it for £65. Then one last item, because we've got a petty cash book, we can claim the VAT back on small items as long as it's properly recorded. Mixture of rates, no VAT on things like newspapers and mill and rail, varies from somewhere like Tesco. Things like refreshment, some items have VAT, sometimes they don't. Cakes don't, coffee has. Chocolate has got VAT on it, really sad. Tesco, Midway, yeah, there, but either way, it's all added up to £17.50 for us. So we can claim that back. So now we've got our totals in. If we carry it down, of course it could have been the other side had we been owed money by the government. Work out the difference. There we are, so we owe the government £4,293.50, and that's our VAT control completed.